If you're a first-time buyer or a home buyer out in the market right now and you're using an FHA loan, noticing that houses are sitting longer and that you have negotiation power these days, then this video is for you. Today, I'm going to kind of break apart the different thoughts relating to negotiation from that of price reduction, concessions, and how to apply those concessions, and what might be the appropriate action if you were to be buying a house. This is going to be a $600,000 home, and I'm going to be talking specifically about FHA. I'm going to layer in a way to actually pay your mortgage down $26,000 faster, making the same payment after 60 months. And what that is that's going to be FHA's 5-year ARM. So first, I'm just going to give you a quick background because some people freak out when they hear 5-year ARM. What does that mean? It's fixed for 5 years, and then it becomes an annual adjusting mortgage. So once per year. How much can it adjust? Up to 1% at that time. Now, key word there, up to. It goes in 1/8% increments, but it can go down up to 1% as well. Therefore, you just have to think about this deeper and longer. As I'm going to show you that in this example here, there are some guardrails to protect you. And as I've had many people going under contract right now, my FHA buyers are picking the 5-year ARM, and I'm going to explain why in just a second. So first and foremost, there is the thought of taking the price down. 600 becomes, let's call it 582. Why am I using that number? Well, let's say I was going to get 3% concessions. 600 now, I'm buying the house for 582. The other option is leaving it 600, using the $18,000 concessions, and I'm going to show you two ways here as I share my screen, and we're going to dive into that. So let's get into this now. What you're going to see here is physically the screen that I work off of. So this is, again, just driven at education and not at sales. What do we got? So there's the price reduction. Look on the far right side. And I apologize if it's a little small. I'll read this off for you. 6.423 on that interest rate. Price of home 582. Final loan amount with FHA 571,458. Total payment 4464. So that's important to keep in mind. So what I want you to pay attention to is then the alternative. If I took on the left side, I left the price at $600,000, but I took that money, that $18,000, and I bought down the rate on a 5-year ARM. On the left, I am not joking, you would see 4.875. What does that mean to you? For the next 5 years, your payment is built off that rate of 4.875. Worst case scenario, if it did adjust in year 6, the maximum 5.875. Well, when you look to the far right, 6.423 is still a half a point higher than that. Even in year 6, you're in a better mortgage than the 30-year fixed. There is the price reduction consideration. So you could challenge my thinking and say, but Ray, I'm going to buy this house for cheaper. What's going to happen? What's going to happen is this. The 5-year ARM payment, let me slide this in here, is going to be about $460 per month cheaper. Okay, so the 3117 principal and interest versus the 3583, 470 just about dollars per month cheaper. Why am I showing this? Because I'm going to show you the power of savings. On the left side, I took the higher priced home, lower rate. And now I'm going to get into what I call an amortization. Guys, this is about the power of your money. If I took the money, and I'm just going to use $460, okay? And I applied it to the principal. Remember, I started at the higher balance with that FHA at the $600,000 to buy down that 5-year ARM. After 5 years, we only know that the payment is fixed for 5 years. So that's really what I'm going to look at. You would actually owe, going into the adjustment, $509, call it $1,000. You took the $460 a month for 60 months, $509,000, okay? Now, I'm just going to flip this over. This is still the amortization, but now this applies to the 30-year fixed. Bear in mind, you started out owing less money on the option with the 30-year fixed because you didn't get concessions, so you didn't buy down the rate. Banking on refinancing here soon. Started out owing $571. But after 60 months, because you paid the same payment as the person with that lower rate 5-year ARM, dollar for dollar, y'all spent the same money in 5 years on the mortgage payment, you would owe $534. Remember, the 5-year ARM, you would owe $509. That's $25,000 gain on the 5-year ARM, and you started out dollars behind, meaning owing that much more. So that is something to think about. Should you take it off the top of the price? Should you take it off the rate through the 5-year ARM. Or alternatively, look, I'll just do some quick TI-83 calculator math. 460, what's the rate? I don't care about the balance in 5 years, but 460 a month for 60 months is $27,000 in hard cash. You keep in the bank $460 a month that you could apply towards a daycare, putting towards savings for your retirement, etc. The last thing I'm going to talk about here is regarding the 2-1 buy down. I just want you to be aware that there's a common misunderstanding on the 2-1 buy down. What's going to happen is your payment is going to be lower for the first 12 months. So I'm using that same example, the 5.981 rate on that 2-1 buy down, because at $600,000, you would pay your closing costs, pay the 2-1 buy down with that $18,000 I talked about in the beginning. And so what you see here is the principal and interest 2806 becomes 3155, becomes 3524. So that's where you see the step up in your principal and interest payment, because your note rate is the 5.981. Is this a better option over the 5-year ARM? Look, I can't say for you, because yes, for the first 12 months, that is a lower payment than the 5-year ARM is. But what's going to happen in month 13 through 24, then you're going to see the difference, and then going forward. So you don't have a guarantee with this 2-1 buy down that a lot of lenders and realtors will be talking to you about with concessions. So is it more about stability in the long term? Is it about the immediate gain? Is it about the price off the home? That's not for us to decide for you. For us, it's to help teach you about the options that are going to be available to you. So that as you go to buy your first home or your next home, if you're using this type of financing or those types of negotiations, such as price versus concessions. Look, I just had a conversation with a gentleman yesterday. It's a $3 million acquisition. Same principles apply. Should you take it off the price? Should you do a buy down on the rate? If you take that savings per month and make it work for you, such as you saw in that example I shared with you on the 5-year ARM, not wasting the $460 a month, rather putting it towards the principal, you saw the power of paying down the balance, $25,000 in 60 months. I'll take that all day long. If I extrapolate that on my client at $3 million on a $1.5 million loan amount, it's going to be a bigger dollar amount, because of the savings would be bigger when you're financing more money. So again, another educational tidbit for you as you're out there in this market is negotiations are happening and sellers are willing to negotiate with you. These are the types of conversations you should be having with your lender. If you want to have a consultation with me, cali.com/mortgage maestro. Make sure to check out other videos on the channel. We are just here to bring you educational videos to empower you through authentic information about life's biggest decision on building verticals of wealth through real estate. Talk to you soon.